Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Welcome back, entrepreneurs. Today, I have the pleasure of interviewing Jason Balin, a real estate private lender based in Maryland. He concentrates the majority of his time as a partner of hard money bankers. Jason provides market knowledge in many real estate classes, from personally investing in private notes, residential houses, office, multifamily, and self-storage projects. He's written 3 books and currently hosts 2 podcasts, Private Lenders Podcast and Real Estate Reserve Podcast. Jason also runs a mastermind group helping other private lenders grow their hard money companies. It's called hardmoneymastermind.com. So with that, I'd like to welcome to the show, Jason Balin.
George, thanks for having me. Certainly appreciate it.
Hey, it's a pleasure. I'm looking forward to this because you've got a lot of things we're going to talk about today. I mean, I notice you have your hard money banker's hat on. So why don't we start there? Let's talk with hard money. I know you do many things, but hard money lending being chief among them. So tell us about the hard money lending business. If you're somebody who might be in real estate, and by the way, a lot of our audience here, they're in commercial real estate. They may be syndicators or may be interested in becoming syndicators, may be passive investors. Tell us, what do you need to know to break into the hard money lending business?
Yes, absolutely. I definitely have hard money banker swag on. I typically wear HMB, hard money bankers swag every day. It's a good, inexpensive way to market your brand, even though most people that see it have no idea what the heck hard money even means, and it's got the word, hard money in this. So that can't be easy, but it actually is easy because hard just means a hard asset. Doesn't mean it's hard to get. So yes, I do hard money lending, private lending every day. And I have done this almost every day for the last 17 years when my business partner, Chris, and I started the company in a very interesting time. In 2007, we were in our 20s at the time. So it was an interesting time to start that business. But in essence, we're lending private capital. The term hard money and private money, they kind of overlap for the most part. But we lend private capital to real estate investors that are purchasing properties. It could be investment residential properties. It could be commercial properties. It could be a fix and flip loan. It could just be bridge capital on an office building that you have. But instead of going to a bank or an institutional backed capital lender, go to a company like ours that is just a lot easier to deal with. The cost of the capital might be a little bit more expensive. Typically it's around a 13% interest rate. In today's environment, that's not actually all that higher or out of whack than what someone else might have found, but it had been, for the last decade until about October 2022.
So you're telling me that those interest rates that we've experienced, that's not natural. We should expect that.
What our rates or my rates?
No, I'm just joking. For those of you listening to the show, okay, I'm totally being sarcastic right now. Yes, we saw some extraordinarily abnormal interest rates over the last decade. Yes.
Yeah, absolutely. But the majority of the real estate investors that use hard money lenders, it's a very popular type of funding or liquidity source, is because they need a quick solution. They might want to not go down the bank route. It's not like a subprime loan. It's a collateral based loan. And, obviously we still do due diligence and we underwrite borrowers and make sure, it's a loan that we want to do, but it can happen much quicker. There's loans that I close in 1 business day. If title works in, if we have some due diligence that's already in place, we can get that loan to the table, in a day or in a few days. So it's vastly different than your bank that might need 30 days or 45 days plus.
Exactly. Just to cut to the chase, I mean, it is hard money asset based. You're mainly underwriting the asset, not asking 10 million questions or 300 documents, etc. So it's something I've done like just once. I think I'd like to do more in the future because, I mean, take a look at where we sit right now. We could be at the point of a recession. I mean, any day now. In the middle of 2024, I feel like people have been calling for a recession for at least about a half a decade. And when it hits, a lot of people that are at the top of the stack, the capital stack, that is, might get hit pretty hard. So some tips for getting into the business, like what are some things you need to know about? I know common things would be the 65% rule or operating in terms of draws. What are some things you need to know if you're making your first hard money loan?
Yeah, so I mean, I guess it depends if you're talking as a lender, or if you're talking as kind of a sponsor or a borrower. But typically, hard money lenders are lending up to 65% of the value of the property. Typically, they want to have like 35% equity cushion in that. So they, one might think that's conservative, someone might think that's lenient. I don't know. But typically 35% equity cushion. A lot of the loans that we do internally, especially on the investment residential space, have a construction component as well. So we'll lend usually like 80% of the purchase price and 100% of the construction costs, as long as the whole project is 65% of the after repair value, the finished value, because those are going to be value add types of deals. So we want to make sure there's enough equity in there. But most hard money lenders are kind of smaller operations. Not that they don't take this. I mean, we're all very serious. We all have full-time employees, and we do this for a living, but we can move quick. It's not like kind of a one-off situation. Like, we know time is of the essence. We do construction draws in-house. We have full-time inspectors on property in-house to go look at properties quickly. So overall, everything happens quickly. On our commercial assets, we can do like desk review environmental studies and commercial valuations quickly, very quickly for the commercial world. When I say quickly, within like 3 days to 10 days on stuff. It's not happening overnight, but it's not taking
like
months.
getting a commercial HUD loan.
That's right.
Which, for those of you who don't know,
Yeah.
that can easily take 6 months.
That's
and that
right.
might be on the short end. Yeah.
Yeah.
Wow. Yeah, good stuff. So one of the things I love about first of all, you have 2 podcasts, very ambitious. I know how much it takes out of me just to do one, but the Private Lenders podcast. So if you could talk a little bit about the thesis behind that show. So what led you to launch it, and what's your niche?
So that was definitely like a passion podcast that came out. My business partner, Chris, and I, who started Hard Money Bankers together 17 years ago, like, we've always had this internal joke that we talk about this stuff every day. We talk about it every day in the hard money world. Like, if you are a hard money lender, you want to be a hard money lender, you have private capital that you're deploying out of your self-directed IRA, or some flippers that you lend money to, whatever that case is, there's no education for that space. There just isn't. There's just not much out there. And there certainly wasn't when we started. We had to knock down every older attorney's door that was lending a few $100,000 out of his account and be like, how are you doing this? How does this work? How do you structure deals? Stuff like that. So we have an internal joke that if we're not talking to each other about this in our office, like, we talk about this anyways, we might as well just throw a freaking camera and a mic on us and talk publicly about it, because it's stuff that we do every day. And it was a podcast, like, again, it was kind of a passion podcast where we would just click go, start on Zoom, or now we're using something called StreamYard, and syndicate it to a bunch of different, Facebook and YouTube platforms live. But we got a lot of followings, and there was certainly a lot of people interested in it. And we just talk 10 minutes, typically 10 minutes per episode, related to, what we're seeing in our business. Like, hey, we got to the office today. What do we do? And just everything inside the private lending business and hard money lending business. So that's just been a fun, very easy podcast for us to do, and very easy for a listener to absorb, just because it's just really quick tidbits of a certain topic.
Yeah, great. I know there are a few people out there telling you how to do this, like Ron LeGrand, but clearly a
Yep.
great niche to be in. I mean, the fact that you've seen such explosive growth, I think, really speaks to the need out there. Well, I hope there are some people out there listening, because, again, I think this is a great place to be. Debt is nice to have right now, or at least nice to own. I suppose it's a nice thing to have if we continue to have inflation. We'll see how that goes. That's always very hard to project. Interest rates, inflation, very, very difficult. So next up, I think I'd like to go into personal approach to business. We like to talk about entrepreneurship and leadership here at the Foundry. So when asked about your greatest strengths, you list staying in my lane, slow and steady wins the race. So tell us how that plays into your success.
So we've had a very simple business approach to everything. We've never had massive growth inside our business. We've also never hit a home run on a deal. And I've done 3,500 private loans.
13% is not bad, by the way.
Yeah.
You can have a lot of base hits like that and do quite well in the world.
I mean, I've been hitting singles and base hits for 17 years. I mean, I've flipped my fair share of real estate owned rental properties. I've never hit a home run as far as I'm concerned on any of those things. And maybe just because we're conservative by nature, maybe that's why we're good lenders, I guess, and cautious. But, you know, I look at it as that I have a lot of friends and I know a lot of real estate investors that have made a ton of money over the last 5 to 10 years because the market has exploded. It was a good time for them to get in. You can buy a crappy deal and it would still 3x in price, 4x in price, 10x in price. And I haven't seen that. I've never done that. So we've always been, and again, they've had massive growth. And I hope that, you know, they're responsible about that growth. And what went up so quick doesn't come crashing down. I mean, I know a lot of folks that are very disciplined right now that they're selling a lot of their portfolios because not that they believe that it might not necessarily be at the top and they might not necessarily believe that it's not performing well, but it's like, hey, I got to take some chips off the table because,
Right.
you know, I started with nothing. So, you know, and I'm all the way up here. Our approach is just kind of slow and steady. Like we want to build a well-oiled machine that for the most part, even if 2007 comes back, because I witnessed 2007, because I own, you know, we owned real estate and we were kind of just getting started in hard money lending back then, that it can withstand that. And I believe that, you know, our core fundamentals, you know, will help with that. You know, one of the best books I ever read was The Snowball by Warren Buffett. And I think a lot of that talks about that. So we take the snowball, you know, concept of, hey, you just grow this big, massive machine. And yes, maybe it doesn't, you know, get you these ridiculous rates of return or these ridiculous big hits, but it ends up being like bulletproof throughout.
Exactly. Warren Buffett, a man who's many times been accused of losing his touch. It seems like every time that that accusation hits a fever pitch, we see our financial markets take a major tumble. And that's when we realize that the Oracle of Omaha isn't known as such for no reason at all. He is there's something to the idea of getting rich slowly, although I have to say I think he got rich pretty quickly, just not in a crazy way. Well, you know, I love the diversification in your portfolio. So you're lending on residential houses, office, multifamily, self-storage, but also another great way to diversify is to be a limited partner, a passive investor. And that's certainly something we talk a lot about here at the Foundry. So why don't you tell us about passive investing, what that's done for you, and any tips you might have for would-be or maybe newer passive investors?
So we've never been great operators of real estate. It's just not something that we've been passionate about. You know, we thought we were in real time, but you know, we're better lenders than we are operators of real estate. And we had, you know, a decent sized rental portfolio at one point that we sold. We sold it in 2020. You know, right during kind of COVID. It probably doubled since then. So it was a little bit bad timing, but at the same time, I bought it in 2012 and 13 and 14. So it already had a lot of good growth on that. But it wasn't something that we really wanted to actively run. We're full-time hard money lenders. We're staying in our lane. Like this is what we like doing. This is what we love doing. We feel like we're very good at it. So we're leaving you know, our ownership interest in real estate to be run by experts that know what they're doing. And we have a few identified operators / friends at this point that we know, and we deploy our capital into their deals and we act as a limited partner. And, you know, we have anywhere between, you know, 1% and I think 50% on a lot of different commercial assets that are diversified into different areas of the country, different asset classes. And, you know, we get a preferred return on it. A lot of them have already refinanced or had an equity event. So we've gotten our capital back, and then we, in essence, redeployed into another deal.
Yeah, great roadmap. Hearing a lot in there, the idea of, yeah, you don't put it all with one operator, but not 50 either. enough that you get to know the people, you understand the quality of what they're doing and their approach, and not all at once too, right? Having invested across the cycle, certainly you've had some deals, I'm sure, that have done very well, like those deals that go 3x, 4x, 5x or more. I'm sure you probably had a few of those over a course of, I believe, 30 investments as a limited partner.
Yep, around that. We're heavy on the self-storage stuff right now.
Yeah. A lot of people moving from multifamily to self-storage. Why don't you talk about that trend?
So, again, the reason that we did it is we had a buddy of ours who we had lent a good amount of money to, and he kind of took that leap a few years ago and was very ecstatic about the asset class, and he liked it. And we went to some events with him. We spoke at some of the events on some of the lending side. We started lending on it. As we started lending on it, we learned a lot about the asset class and, cost per square footage and, areas. And like, we've kind of just ridden his coattails a little bit. And I think some of it's market timing. I think we kind of got lucky on some of the stuff that he purchased. But, I think we learned along the way of, hey, you buy a 10 or 15,000 square foot facility at, whatever, sub $30 per square foot is great early on, but eventually there's only so much growth that a facility like that can have. And then, try to get into the bigger stuff. And then as you're someone in the bigger stuff, you realize that you need to kind of corner some of the markets, because some of these properties, you're sharing vendors and boots on the ground operators and employees, and you can't support them if you have like, one small facility in one part of the country. So, one portfolio we're in has like 8 assets, and they're all, pretty close together. And that's a good one. And they share a lot of resources by doing so. And, they kind of cornered this particular market. And so we've just learned little things kind of along the way, but I definitely wasn't driving the train on that. I was following the coattails of somebody and taking a back seat and, trying to put our capital to work.
Yeah, one of the best reasons I think to be a passive investor, and I've invested in everything from triple net, private equity, early stage startup companies to multifamily, et cetera. So you get to learn a lot. I mean,
Yeah.
it's considerable. And when you see trends like this, could be a great way to identify them. If you have to go run everything, the level of knowledge required for that, very, very difficult to pivot. But again, if you have your finger in 5 different pots because you're a limited partner,
That's right.
much easier to identify the one you might be willing to do that work to pivot to. Well, you do have another podcast, the Real Estate Reserve podcast. And I think this is another one that's going to speak to our audience very strongly, because we tend to be investors. So tell us a little bit about the thesis of that show. Who's your audience? Who you're trying to reach? And what's the plan for the future of that podcast?
So that's a podcast that, we kind of organically set up around COVID time, that a buddy, Ian Horowitz, and I run together, mostly because, a lot of stuff was shut down around here during COVID. We were very ambitious about real estate still at the time, and we wanted to kind of just get the word out. And we just both sat in front of our computers at home and we started talking about our knowledge. I was on the lending side. He was on the commercial asset side. He also had 250 rental properties plus a bunch of commercial assets. So we could both kind of play off each other nicely. And that's geared, about 50% of our audience is real estate investors, residential real estate investors fixing and flipping properties. 50% are commercial operators, a lot of self-storage people, some multifamily. He owns like an 86 unit apartment building, a 36 unit apartment building, a 54 unit apartment building, stuff like that. So like, it's a good diverse audience, mostly real estate investors. We've also had, some guests on entrepreneurship and business growth and marketing and attorneys, tax saving stuff, things like that. But that's also another fun one where I kind of can just go on podcasts and, act like yourself and be like, hey, let's interview some great guests of what they're seeing in the market. And I have realized after interviewing a lot of people that there's a huge variety of niches in this space. And also like everybody does it differently, and different areas of the country offer a lot of different things. Like Texas, for instance, like we can't buy land around here. And if we can, we're buying it for a premium. folks in Texas. We interviewed 3 different people in Texas, all different areas of Texas. None of them knew each other, and every one of them were flipping land and making a fortune doing so. And we're like, why can't we do this in in our home market?
Exactly. Just like being a passive investor, running a podcast is another great way to keep your finger on the pulse, figure out what I want to do next, invest in either actively or passively. Yeah, absolutely.
Yeah. So, yeah, so it's been fun. I mean, it's fun. We've had some decent sized guests on there, which has been fun. That's a nice thing about running a podcast and having a platform as well, is you can, get to know a lot of cool people. Like we know each other now because we're chatting on this, and
exactly.
it's
a high quality relationship. 30 to 45 minutes going deep on somebody's career. I often call the people that I've interviewed or refer to them. So it's definitely an awesome way to make a great relationship.
Yeah, absolutely.
Yeah, good stuff. Well, and let everybody know, hey, if you want to find out more about Jason Balin, if you want to get one of his books, I believe they're all essentially free for less shipping. Head out to his website, which I believe is
hardmoneybankers.com. That's
hardmoneybankers.com. All right, excellent. And is there another or a better way to reach out to you if you got a question for Jason Balin?
Sure. Just Jason@hardmoneybankers.com. Jason@hardmoneybankers.com is my email. I don't have like personal assistants that check their emails or anything.
There's nobody screening us out.
There's no
you get to the real Jason.
I don't need to be screened. I mean, I get a lot of emails every day, but like that's fine. Like you go through them, and there's deals out there. We're all on the hunt for deals on a regular basis. Like that's what's important. So I'm available.
Yeah, awesome. Well, Jason, I want to say thank you so much for taking the time to share your knowledge and experience with our audience.
Absolutely. It was fun. I appreciate it, George.
Yeah, likewise. A lot of fun.